Once Bitcoin breaks this key level, things could get really crazy really fast here for the crypto market. As it currently stands, Bitcoin has been forming a range between $81,000 and $89,000. And the thing is, we've actually already broken out of that today, as the price of Bitcoin hit over $90,000. Over $9,000, but then 19. And here's the situation. Bitcoin between $81,000 and $89,000 has been a really fragile range. It lost key support after key supports, and many people have realized their losses, mostly it being short-term holders. In this case here, the short-term holder loss ratio even collapsing to 0.07 times, signaling fading liquidity and demand. Now, long-term holders are still realizing profit, but the momentum is weakening and could shift if liquidity deteriorates even further. What was basically being showcased is that leverage was slowly but surely leaving the market, liquidity was thinning out, people were more hesitant to trade, more hesitant to open up new positions, and this has, in my opinion, been ongoing ever since the 10th of the 10th crash. The moment that crash came in, even people like me have stopped really participating in the market for a little bit, and they're not really that eager or keen to do so until market conditions get better, or, funnily enough, until liquidity comes back from everybody just piling back in. But again, that is not happening because the price just broke key level after key level after key level. But mind you, it is way easier to break those levels if the liquidity is thinner, or if it's a coordinated, manipulated effort like I've talked about a few times prior. Because again, stock market went down, sure, but just like on the 10th of the 10th, it's just part of the story because Bitcoin and the cryptocurrencies follow the stock market, especially recently, but going down so much more than stocks is kind of crazy. Now, one of the main events, I'm going to say two of them, but one of the main events here that people are watching out for is actually the main options expiry for December, as options positioning remains defensive, with heavy puts near 84,000 and upside still being faded around 100K. Overall sentiment is cautious, and recovery requires reclaiming major cost basis models and renewed inflows, which again, perhaps can already get started just now as we've broken above $89,000 and potentially here could hold. If you're wondering though on the upside, what is one of the most key levels to watch, it is most likely going to be the $104.6 thousand level. And one of the reasons people fear this $81,000 to $89,000 range is because it resembles the depths that we saw basically in the Q1 2022, right after the all-time high in 2021 was hit, where the market weakened under falling demand. Now there's more negativity because many of the factors that were showcased at the start of the bear market for 2022 are right now being replicated yet again, as basically a lot of people are realizing their losses, which shows or signals a clear erosion of confidence in the uptrend. And again, I like to state that that's not necessarily true. It could very well be so that because of the 10th of the 10th, the major liquidation event, $20 billion got wrecked, right? I still very much believe that this is just a wave of pessimism, so it makes sense for some of the confidence to be low at this point. But it's a cascade of different events. I don't think that this necessarily has the same sort of effect as in 2022 because I think one sweep back upwards could actually ignite a lot of the momentum again that was lost because of that wave on the 10th of the 10th. But when you start breaking it down, the majority of what this report here refers to as to why the market is looking kind of gleam right now, not too beautiful, is the fact that many of the points resemble what we saw in Q1 of 2022, and very much so that liquidity is loosening up and that confidence is slowing down. And a lot of people are realizing their losses, and if you combine those things together, well, that's logically pretty negative, sure. Now, before I move on, I will quickly state, if you're looking for a crypto exchange to trade on, here's an exchange you can use from anywhere in the world. You might need to use a VPN, but regardless, it's Blofin, the exchange I talk about every single day on the channel. And right now, they've got something pretty special. You can see right here, they're giving you a $300 position for new users. All you got to do is just put your phone number in or your email, just confirm that. Again, no need for your ID or things of that sort. And the idea is just get yourself an account, confirm that you're a real human with your phone and whatever, right? And then you get yourself a $15 free at 20x leverage. So a $300 position to you. And once you're inside of your account, you have to go to this little thing called the Rewards Hub and then the Coupon Center. And then it basically looks a little bit like this. You just choose the different coin you'd like to open a position for, and you open it like this. Pretty nice and absolutely free, which a lot of people like to see. Anyway, link for that is down below. However, let me counter a lot of this by stating, we've got a major event coming up on the 10th of December, the rate cut. We've got a pretty raging stock market yet again. And just a few days ago, when Bitcoin had its massive break, what was the main factor affecting the stock market? Matter of fact, even on the 10th of the 10th, what was affecting the stock market? As we all know, The 10th of the 10th was an absolutely horrible day for the stock market because of Trump's announcement. Pretty quickly afterwards, though, the crypto had its own little bits and pieces of errors, which caused us to go down like crazy. But recently here, just a few days ago, the stock market again had horrendous days because apparently the AI bubble was supposed to be over. Caused everything in the stocks to basically crash like crazy, and cryptos as well. Now, everything's basically going back to green. Why all of a sudden are we so much more afraid of crypto than for stocks here? Like for stocks, a lot of this AI bubble fear has just been wiped out overnight again, and AI is the next big thing. When it comes to crypto, though, the fear is still there. Why? Because the recovery is a lot less quick than we saw with stocks. Stocks, the S&P, for example, is almost back to an all-time high, whereas Bitcoin is still like almost $40,000 below it. Now, again, I would like to make the argument that Bitcoin right now seems suppressed, or rather is actually pretty undervalued or cheap right here relative to the stock market, which again also has been pushed down significantly at almost the exact same time right now. And sure, we may attribute some short-term holders selling to this or thinning liquidity, but thinning liquidity, theoretically speaking, goes both ways. If liquidity is thin, there's a lot less pressure in the order books. If the market gets pushed upwards, theoretically speaking, that should also cascade significantly upwards. Now, apparently, there's also some long-term risk, though, to this liquidity fading. Liquidity traced through the realized profit loss lens can also be extended to the long-term momentum by examining the long-term holder realized profit over loss ratio. Loss ratio. The 7-day SMA of the metric has followed the spot price lower, sharply dropping to 408x. Trading above about 100x still indicates healthier liquidity conditions compared to Q1 of 2022 or the major bottom formation phase of this cycle, meaning long-term holders are still realizing profits and not actually loss. And this again, when you see long-term holders realizing a loss, that means confidence is really over. Short-term holders don't matter as much because they're newbies. However, if liquidity continues to fade and this ratio compresses towards 10x or lower, probability of transitioning into a deeper bear market becomes difficult to ignore, and this threshold has historically marked severe stress across long-term cohorts. But we have yet to get even close to that. And that's again a thing that people seem to underestimate. The fact that a lot of metrics that we are watching right now are all short-term indicators, and we are comparing apples to oranges in reality, saying that this is basically like the bear market of before, when in reality, most of the metrics still look pretty healthy for a bull market. Compare the long-term holder realized ratio here. Relatively, right? Look at the numbers and look at where we were just earlier in 2024 or earlier in 2025. We were way lower, and basically, we get a little periodic dip, a periodic minus 40% move in BTC or so. Almost all the metrics move in an exact same fashion before yet another high is made and another price is being broken. And again, a lot of these factors which can be seen as negative, like leverage bleeding out here, there's still a lot of leverage in the market, sure, but also you have to understand, after a mass liquidation event, and specifically the last couple of weeks being so volatile, it takes some time to build some crazy amount of interest, specifically in terms of liquidity, into the market yet again. It takes some time. Now, some of this liquidity being gone is actually quite positive because it means the market will most likely have less crazy moves over the shorter term. And if you can take a look at this, you can see how much was just wiped out over in that October phase and what levels we are currently sitting at in terms of open interest. It's a very, very, very big difference. Matter of fact, it basically halved in just a month or two. And if you really thought that the bears are taking over here, really, you might be quite wrong. And that's maybe because you've only been in a bull scenario where the bulls were very much at hand, at least for the last couple of years, or most of the last couple of years, because in reality, funding is actually at a quite neutral spot currently. This marks a clear shift from the consistently positive funding from before, as right now we've covered more, sometimes in the negative territory, mostly towards neutral. And this positive funding of before, typically, or of more speculative phases, signaling a more balanced and cautious derivatives environment right now. And this is basically what we call a little sort of equilibrium of sorts, as traders wait for clearer signals before committing to direction. And this exact last part is what I keep trying to emphasize in most of my videos recently. This idea that as it currently stands, everybody is waiting for the next major direction. There's a lot of people that are not sure whether or not we are in a bull market. You never get these questions. You only get these questions when people are unsure about the entirety of the market. Right? We didn't see it that much in 2025, the rest of the year. We didn't really see it at all in 2024. There were slight glimpses of, ooh, this is bad, but not about, is the bull market over? Only right now are we saying, no, this is, again, perhaps going to be another year or so of down, or really when the market turns around, we go down like crazy. And that's the interesting part. I think partially it has to do with the fact that we are further into the cycle. Partially it has to do with the fact that we've now breached the all-time high by a serious amount, right? And because of some of the massive events happening. Like, for example, the DAT bubble bursting is what some people are saying, or the president committing everything, or the freaking US right now in many different states allowing for a Bitcoin reserve and things like that. These could, on their own, already cause a new bear market because we're getting overexcited. Now, again, one very important thing to watch out for, a new high in options open interest. The recent surge in volatility has increased activity across the options market. A combination of volatility arbitrage strategies and renewed demand for risk management has pushed Bitcoin-denominated option open interest to its highest level ever. It's important to emphasize that this applies only to Bitcoin terms. In USD terms, open interest remains well below the late October peak, when Bitcoin was trading near $110,000. Even so, the current buildup highlights how engaged the market has become as participants reposition around the latest price swing, and this sets the stage for the upcoming key expiry, which is shaping up to be one of the most significant in the near term. So again, in terms of Bitcoin, not in terms of dollars, we are seeing some record-breaking numbers right now, which is why they're calling this right now the most important options expiry period. So skipping part of this story, the strike distribution right now shows a heavy put concentration near 84,000 and growing call interest around $100,000. And the zone between, let me quickly open this up. The zone between these strikes is relatively thin. You may think it's wide, but it's not actually that wide, creating room for a sharper movement within that range. And dealers are short gamma on puts and long gamma on calls, implying that upside may remain capped over the coming weeks, while downside risk has not been fully cleared. In short, the recent rebound may continue to struggle below key resistance. And here's again my funny answer to that again. If you're looking at crypto prices right now, the fact that we are back again at $90,000, in the grand scheme of things, looks more towards the bottom, right? I mean, we are still very much there. But I'm going to call right now and say a lot of people did not expect us to move so quickly back towards 90,000, actually conquer it for at least a little bit. And by that logic, I do believe, again, many are just underestimating how severely quick a move towards like $100,000 or $99,000 can go. It could literally happen in the span of a few hours, maybe even 1 hour if we're lucky. As this, again, this range between, let's call it 84 and 100K, this right now is, I'm going to call it no man's land. Things can happen so quick. Even the event around the interest rate decision, just that alone could make us go $5,000 down in a few minutes or $5,000 up in a few minutes. It can really happen that quickly. And if you've never seen it happen before, understand that we are one of the thinnest and interesting environments we've ever seen. A move of that magnitude is not unprecedented and not unlikely. Also, I must admit that if you're taking a look at the option spread and the way that things are looking right now, taken together, the decline in implied volatility and the easing of puts Q option point to softer demand for immediate downside protection. And this basically, it says it below, this basically means short-term fear has cooled down, even if the broader environment remains prone to sudden shifts. And I know it's a bit of an options-heavy video, but I think out of all the metrics, it's actually most interesting right now. There's also a part that says in positive carry territory. Shifting from volatility levels to carry dynamics, the current market environment has moved into positive carry territory. In option terms, positive carry means short positions earn theta because realized volatility is running below implied volatility. So positive carry, in the simplest terms, basically means you get paid for waiting. And so in this whole debacle, may be a bit difficult to understand, but you've got this implied volatility versus the realized volatility. If the implied volatility, right, so what they expect is going to happen in terms of volatility is way higher than the actual, the options can be way more expensive than the actual market should price it in for, or where it should be. So they're pricing in something way higher than where it should be at, or than where it's actually at. And the idea is that if you sell options, you can basically make a lot of money because of this time decay between now and the end of December, let's say, as long as the market doesn't move too much because of the volatility, obviously. One more time, just to make sure it's straight, because my explanation might be a bit garbage. Shifting from volatility levels to carry dynamics, the current market environment has moved into positive carry territory. In option terms, positive carry means short positions earn theta because realized volatility is running below implied volatility. Put simply, the market is not moving as much as the option market is pricing in, allowing sellers to collect time decay without giving it back through hedging losses. 1 month implied volatility remains elevated, and far out of the money options expiring in late December still command high premiums. This setup makes selling volatility appear attractive from a carry perspective, since implied volatility sits above what the market has recently delivered. However, conditions can shift quickly, and the upcoming Federal Reserve meeting introduces potential event risk that could change realized volatility and the carry landscape. But this most likely is what these options are pricing themselves for, the Federal Reserve meeting on the 10th of December. Long story short, they're basically saying that right now, a good time to sell options as right now it seems as if they are overvalued or overpriced versus the actual move, right? This implied volatility is above the real volatility with the chart attached to it. And simply put, if this green line, which is the implied volatility, is above the red line, the realized volatility, Bitcoin is moving significantly less over what the people believe, or I guess the option callers, let's say, believe. And the idea is, though, and this is what a lot of people seem to forget, that just because this is showing real big green right now doesn't necessarily mean it's going to last because, well, any mass Bitcoin move or any liquidation cascading or any macro shock is going to turn this around pretty quickly. That's obviously why it's such an interesting game. But that's one of the most interesting games in crypto right now ongoing. And there's a lot of money flowing into this. Rather, if you compare it to the traditional leverage here like we normally do, this is right now playing a way bigger role than people may realize. And this may actually be one of those factors in the back end that could have a drastic involvement in cryptos, making a sudden move or being protected at a certain support or resistance that you normally don't watch out for. So this is a little bit of an alternative video, but I do believe it sometimes is nice to look at the other side, especially if you're not normally into trading options. And here is another confirmation of my own personal bias. Turning to flows, the activity around the 80K put offers a clear view of how downside protection has evolved across short and mid-term expiries. Put demand has flattened over the past 4 days, aligning with the rebound that began near 80.5K, and this plateau indicates that the immediate need for short data hedges has eased. The sharp pickup in downside protection observed during the sell-off has not continued since the recovery started. And with short-dated downside flows fading, the market is signaling that the probability of an extended move lower is now viewed as smaller than during the recent decline. Sentiment has shifted from urgent protection to a more measured, cautious stance. And even though this short-term move upwards may have removed some panic, still most participants are not sure what's going to happen next and are not committing to the move towards the upside, which is exactly what we've been covering for the past couple of days, that we need, most likely, one of these major pump scenarios or major event, or perhaps another really crazy day in stocks, but we're not going to get it because, again, tomorrow's Thanksgiving, day afterwards is another half-assed day with Black Friday. If stocks are not going to be the one deciding it, it's going to be crypto on its own, and that's a little bit scared to let it up to crypto. But right now, we are in the no man's land, the middle of the zone, and that's why I keep on shouting. One move here towards either direction could really indicate a lot. And I really think that the only one event we're watching out for is December 10th, the federal rate cut. Well, most likely going to be a cut. And I do believe if we are able to stay above 89,000 here as we close the daily, things could already start looking really, really good. Again, the range that we are in right now, $84,000 to $100,000, is, in my opinion, the most interesting no man's land, with the short term being 81 to 89. Since we're already breaking above that, if we're able to hold, I personally think, again, 100K to hit for, to look for, is a lot more likely than 81K. We're not in full capitulation, even though the numbers do suggest that we are. We've seen it. It actually, matter of fact, shows that that was most likely behind us. And we are in a very low conviction environment. Again, sentiment is low, but sentiment, as we described previously, usually catches up to data, meaning if the market does turn back around, you'll see all these naysayers, all these people here, all of a sudden shift their minds as well. And I know I'm out here dancing, dancing on the fact that the market is up ever so slightly in a mostly downwards environment, but I'll counter that by saying, first of all, you got to have hope somewhere, and I'm a permanent crypto bull, meaning short-term downside, can't do much about it. But long-term upside, in my opinion, is always going to be there. And as long as I'm a crypto bull throughout all these periods, and I just look for whatever I can buy myself the cheapest of cheapest coins, I personally think I'll be good over the long term, and that's my strategy. Long-term, buying these coins at cheap prices, hopefully, or at least not give up whenever things get bad. I can give up when things are really, really good. It's worked for me thus far, and I think it'll keep working for me in the future. But yeah, now, again, last time I'll tell you real quick, if you're asking me which prices would I be buying at if the market were to flow down from 83, let's say to be blunt, $84,000 minus. I actually have some pretty juicy buys set up. Let's say $83,000, $84,000 range, $78,000 range, all the way down to $71,000, and then I'm actually probably not buying as much until we get towards maybe perhaps, let me quickly put it in here, perhaps let's say a 61, 62, 64. Depending, of course, on how quick the market falls. But more importantly, my last line of defense at roughly $54,000. That's where I'll be buying all in basically if we ever manage to go there. But I do believe more likely is for us to slowly but surely make our way back towards the moving average, moving back towards $102,000, and from there slowly but surely get back into overbought territory. But again, we got to give it some time. Could this happen within a few days? Sure, but we need to give it some time. And the key event to watch out for will again be in roughly 2 weeks. And perhaps a lot of people are going to start pricing that in, the event that the rate cuts are going to be happening in 2 weeks and the price can pretty quickly move back upwards. But I'd say that right now, in almost any way, the real danger of the falling knife is kind of faded because the stock market's going to be closed for the next few days, next foreseeable future really even. And we're going to have an interesting Bitcoin close without stock market influence this time around. I wonder if you can finally close back above 90 and just start this little bullish season again. We can recoup some of the losses and finally get some confidence back in the market. But all I can say about that is we shall see. I'm still very confident. I'm not selling my freaking coins at the bottom. And that's about it for this little crypto update. Make sure you press the like button if you learned something new or if this is something you like, talking about something different than usual. But I thought it would be fun to quickly cover a different side.